T minus 60 seconds. T minus 50 seconds. T minus 40 seconds. T minus 30 seconds. T minus 20 seconds. 15 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0.
Welcome, everybody, to the 5 Foot Viking podcast, where you get to drink a beer and learn something new. Tonight's show, I'm really excited about it. It's all about home lending. Maybe a little over a month ago or so, I had my good friend Javier Guerrero, who is a real estate agent / broker. He was on, and we talked a lot about the market and buying houses. But this podcast is directed all the way to what it takes to get into the loan. So really excited. We got a lot of stuff to talk about. Before we jump into everything, just want to let everyone know that I love your interaction. I love being able to see your comments and your questions. And the only way that I can do that live is if you are logged on to the 5 Foot Viking Facebook page or the 5 Foot Viking YouTube page. If someone shares it, that's awesome, but you got to click on the actual 5 Foot Viking in order for me to see your comments and your questions. So the best way to do that is literally if you go to the 5footviking.com. If you go to, it's right there at the bottom, scrolling through the bottom. If you go to the 5footviking.com, there is basically a landing page where you can go and look at everything. You can click on the Facebook page, the YouTube page, the Spotify page, the Twitter account, the Instagram. There's all kinds of stuff there for you. And you can look at podcasts that are happening live, but you can also look at past podcasts and you can listen to them or watch them. And also just to let you guys know, there's a lot of gear that I've been using, some lights and some microphones and stuff like that. So in the description below or above, depending on what you're watching or listening to, there are links to all of the gear. I know I've had a couple people ask me what I've been using. So there's a lot of links down in there for you to take a look at. So we got a couple people already jumping on. Love that you guys are hanging out on your Tuesday night. Appreciate it. Sean, haven't seen you in a minute. We love you too, human hair. Okay, I like that. That's good times. And my good friend Richard, bass player. Love you, buddy. Good to see you on here. My neighbor Karen, miss you. You're my neighbor, and I haven't seen you in forever. It's crazy. Thank you guys so much for jumping on. Appreciate the support. Tonight is all about home loans. And I'm bringing on my guest tonight, which one of my really good friends, Yaman. Yes. And Swan. How are you, sir? Great to see you on here. Thanks for jumping in. Appreciate you being here. I know you've got, you know, my next guest, pretty well. And, so my next guest, his name is Berto Zepeda. Zepeda with a Z, Berto Z from Parts Unknown. He's a good friend of mine. We met a while back. He is a great drummer. He's a good person. He's been doing loans now for like 30 years. And I didn't understand this until, when we met and we were doing shows. There were some times that after sound check, he was on the computer doing stuff. And he's just, I don't understand how he can balance all this stuff. It's pretty crazy, but he knows so much about loans. And I figured he would be probably the best person to really get down to the nitty gritty of everything. So ladies and gentlemen, please put your hands together for my good friend Berto. Berto, how are you? And thank you so much for being on the show.
Mr. Whit, I'm so glad to be here today. Thank you for having me.
Absolutely. It's been fun learning so much about, we've had a good time, just being on stage, because now we have a police tribute band as well. I've been playing with you guys in the long run, but then, seeing you do work while you're there and showing up early so you can do loans and stuff. Quick question: how in the hell do you balance being a loan officer and being a rock star at the same time, dude?
Well, it's hard damn work. I'll tell you that. Well, I'm a multitasker, so that helps. Hey there, Swan. How you doing, man? And I really usually don't want to take work to a gig, but it usually just ends up happening. And I, after I check all my drums, I have my laptop on my snare drum, and I'm shooting off emails and trying to get some stuff done. But so I just, but the thing about balance is that I've always been, my big thing has always been balance in your life, and the music really balances out my business side, because you can't be business all the time. Well, you can, but you go nuts. Yeah. So the music is really the outlet for me, and it really helps me in my life.
Well, speaking of not being business all the time, it takes us to our very first segment, which is always my favorite segment of the day, which is the beers of the week. So, starting off with Berto, what are you drinking tonight on the 5 Foot Viking podcast?
Well, today I'm just drinking a Corona Familiar. It's a fancy Corona, I guess. Familiar. And I got a couple limes in there as I do, and it's a delicious beer. And I'm going to have some right now.
Well, I'm keeping it super simple tonight. I'm drinking Tecates because I had or Tecate. However, I have to throw it in the Viking mug. So because this is just how it goes down. So everybody at home, if you have a beer, put it up in the air. Skål.
Skål.
All right, good times. So now that we have the beers ready to go, I wanted to start the show off, and because we know each other pretty well, and we've known each other for, gosh, I want to say 6 years or so, and a lot of it started off with just music, but then we kind of I learned a lot about you being in business, and so. But I wanted to give everybody else a good understanding of, where you came from. So let's jump into Backstage with Berto. You know what I need to start doing? I need to start getting like theme music for the for the intros. Like, ladies and gentlemen,
I know the drummer to play that on.
Backstage with Berto. And so give us a little background to where did you grow up, and how long have you been doing loans, and how did you get into doing loans?
Well, I grew up I'm an LA boy. Grew up in a little town called Eagle Rock, just other side of Glendale here. And when I was in high school, my mom started doing home loans. She was a loan broker back then. And in the summers, instead of me just laying around not doing anything besides bashing my drums, she says, "Hey, I need help at the office. Come on down, make copies for me and drive this over there to that company, and I'll pay you." I'm like, "Okay, cool." So I made some money on the weekends, and but I'm a numbers guy. Drummers tend to be really methodical and thinking grids. Yeah. So and in numbers and subdivisions, and so mortgage was kind of natural for me because, well, number one, it was in the family, and number two, it was about numbers, so it worked for me. And so I basically started, like I said, helping my mom in the weekends. Then when I graduated high school, I did a couple years of college. Actually, I got my degree in electronics, and I was supposed to be building robots by now. But but when even with my degree, they weren't going to, at an entry level job, they weren't going to pay me as much as I was already making in mortgage. So I said, I'll just keep doing mortgage, and that's what I did.
So you jumped into mortgage right out of high school?
Yeah, I was basically, before I even graduated high school, I was working in mortgage because I was helping my mom in the summers, and even in college, I kept working for her.
So you were doing loans while you were going to school to build robots.
Exactly.
And where did you go to school?
I went to high school in Burbank, Catholic school, and then did college in Glendale. So yeah, like I said, I'm an LA boy, so everything's been pretty much right here.
Mm-hmm. And then once you started doing loans, so the money was just so good, you were like, you just took your degree and just put it in the closet, or?
Yeah, I did. Like I said, they weren't going to pay me as much as, and by a lot, they weren't going to pay me as much as I was making in mortgage. So I just said, I like mortgage. I like the numbers. I'll just do that instead. Mm-hmm. And to be honest, if I was working for my mom, that made it easier for me to take days off for gigs.
Or it made it harder.
Well, it could have gone either way. Yeah. But she was cool.
So, and you've been a musician too since you were a kid.
Yeah, I gravitated to drums early in like the 70s, so 11 or 12, maybe even earlier than that. No, actually earlier than that. I remember watching TV shows, and back when game shows had live bands for the music in the 70s, and I was glued to the drummer. That's what is he doing? How is he making those sounds out of those drums? And,
how is that angelic music coming out of those?
And so yeah, but I got my first drum set when I was a freshman in high school, for 13, 14.
So you've always been balancing work and bands. You've always been doing that.
Yeah, always.
And how many different bands have you been in?
346.
346 different bands, yeah. And you play the triangle in
in Bermuda. No, that's Switch.
Yeah. So I remember we talked before. Did you ever play in? Was it like the '80s band or the '70s band or?
Yeah, I did. I did well, I started off doing the original thing in the '80s. I was on the Sunset Strip in the '80s that whole time. Saw a lot of bands come up and get famous, and I didn't. And then I did the whole thing again in the '90s. When grunge was big, and it got a band was grunge-like, and then after 15 years of trying to make it as an original band, trying to be a rock star, I thought, well, I still want to play, but the dream of being a rock star was growing,
thinner,
getting farther away because getting older, and so I still want to play, and I know that you can make money playing covers, and I like covering music. I like dissecting songs and figuring them out, and so I started a regular, like in the '90s. I started a cover band doing like all the rock hits of the '90s. But then I also did the disco thing. I did the '80s new wave thing, and now I'm moving on to tributes with Long Run and the Police tribute now with you.
Well, real quick, let's talk about the TLR band. How long have you been working with the Long Run?
Oh wow, it's got to be like 12 years now.
Oh, because here's the thing, ladies and gentlemen at home, if you've never seen TLR experience the Eagles, and you are an Eagles fan, you really need to make your way over. Even if you can check them out online somewhere, some other shows. I'm fortunate enough to jam with them occasionally, and it's been a blast. And one thing that I got to tell everybody that's watching at home is the behind the scenes part, which is perfect for this segment, Backstage with Berto, is that Berto runs a lot of he knows how to do the ear monitors, and he knows how to make sure that everything is working correctly. And he's maybe that's part of your degree is your tech savvy. You understand how this works.
I never even thought of that.
Yeah. I mean, anytime that there's a tech question, you're the guy that everybody goes to.
I'm the guy.
You're the guy. So, not only are you on the drums and you're holding it down, and you're the backbone to the band and to the song, but whenever we need help with tech, you're the guy that we call as well. So,
well, so you made me realize I am using my electronics degree.
You're welcome.
I think I need a raise.
Yes. All right, we're gonna put that in with gig, and we'll see what happens. All right, awesome. So let's okay. So we're gonna jump into and the same type of thing that when we had the podcast with my friend Javier and we talked about real estate. We know that there's so much to talk about. And there's so many questions and so much. So we might skim across the top, and we're going to try and talk about as much as we can. We may not be able to dive as deep. We might have to do a second show to dive a little bit deeper into some stuff. But let's jump into the second segment today, which is called First Time Home Buying 101. And this is to let you guys know, I came up with a lot of questions that I just personally had. And when I presented them to Berto, he was like, this is a good path to go down. So everybody who's at home, if you're watching this, if you have any questions with anything that we're talking about, jump in on the comments. We'd love to get things answered right away. And you guys might even spring up something that's, we can talk about. So the first one that as far as first time home buying, I figured the best thing to start off with is what kind of loans are out there, because you obviously understand a lot more about that than I don't even know. I've heard the terms of like FHA, but I know that there's so many other loans out there. So for the first time home buyer that is coming to you, how many different options do they have for loans?
Loans actually, you start in two flavors, conventional and government. A government loan it's not from government. FHA, VA are government loans, and those are loan program options, and it just means they're insured by the government, but a bank still makes that loan for you. It's just that when they go to insure the loan, which all loans are insured, we can get to that later. When they go to insure the loan, they just go to the government to insure it, either FHA or VA. And then conventional is just a loan that's not insured it's insured by a private entity, meaning not a government entity. You might have heard the term Fannie Mae and Freddie Mac. Yes. Those are big insurers and purchasers of conventional loans. And one is not better than the other. There are pros and cons depending on your particular situation. And that's where I come in to help you say, well, because you're a veteran, you could get a VA loan and do zero down. You don't need any down payment. The VA will finance 100% of the price of the house for you. That might be good for you if you don't have cash, but you need to be a veteran or be married to a veteran.
Actually, this brings up a good question. My sister has a question here on YouTube. She says, do you have to be married to get a VA loan with your partner?
That you don't have to be. If your partner is a veteran, you can get a loan with them. That does require what's called prior approval from VA. So we do actually have to go to, because when we're doing a VA loan or an FHA loan, the loans don't have to be approved by them. We approve the loan. Again, we approve it and make the loan for you. But when you're doing a loan to a borrower, on a VA loan to a borrower that's not married to the veteran, that does require prior approval from VA, and they usually approve those, but it just takes a little extra time.
Okay.
So the short answer is no, you don't have to be married.
Okay. So some extra work, but
yeah,
it's okay.
That's a good question.
Okay. So there are multiple different loans, and the difference between like the FHA, VA, and the other ones are conventional, non-conventional. So some are insured by the government, and some are insured through
by non-government agencies.
By non-government.
Yeah.
Okay.
And
you
go ahead.
I was going to say, and so when someone is their first time home buying and they're coming in, they're going to tell you their whole situation, and you're going to be able to evaluate and kind of recommend what is the best route for them.
That's why a human loan officer is important. Still these days, even in the age of the internet, I mean, there's lots of online lenders where you just go on, click, and a lot of people like that. They don't, and there's no interaction with a human.
Yeah. I hate humans.
They're overrated. But, and you could do that. I'm not saying that that's not a good way to go, but if you have a professional and someone that you can trust, that's the important part.
Absolutely.
You got to be able to trust them. So you have a referral from a family member or friend who's used them, or, you're watching me now and you say to yourself, I trust that guy.
Yeah. I like your face. You've got a good face.
I like you. And, that they can steer you, not steer, that's the wrong word, where they can show you options and guide you and say, well, you could do it this way, but, and if you really want to do that, we'll do it. But this might be better for you. There's other options.
I enjoy talking with a real human. I know we joked about it earlier, but I mean, I just went through some credit card fraud yesterday, and I was on the phone. Oh yeah. I'll tell you about it later. It's a long story, but it was rough because I was on the phone for about 4 hours talking with multiple different people in multiple different multiple different departments. And I had to explain myself every single time to a new person and this and that. And finally I just got off the phone and I went to a branch and I talked with a real human being and I said, this is what's going on. Help me out. And got it done. So it's much, I think that, when you're trying to pick which loan you need to get, it's probably better to talk with someone who knows what they're doing and knows your situation and can kind of let you know, hey, if you do this loan, you can do it, but this is what's going to happen. Or you can go this one's going to happen, but ultimately it's up to them what they want to do.
Right, exactly. And that's the purpose of a loan officer, a licensed professional, is to give you that education and that guidance, so you can pick, so you can make an educated decision.
Yeah. Okay. Exactly. All right. So moving out, once we pick the loan that we want to do, the next thing I was curious about was, what credit score do I need to have? And I think that this is probably the question that deters a lot of people because let's face it, a lot of people, we're sitting on some debt. We're sitting on some credit scores. Some of us, trust me, I've had great credit and 6 months later it was crap because, it happens. But like for a rule of thumb, what type of credit do we need to come in with?
Before I answer that, I want to answer a couple of questions that came out on comments.
Let me jump
My opinion on Purple or Rocket Mortgage, those online lenders.
Oh, again, yeah. Okay. Let me jump up onto this. Sean Murray. Sean, what's up, buddy? What's your opinion on Purple or Rocket Mortgage?
Yeah. Again, those online lenders, I'm not saying they're not a good choice. But again, you're going to get little to no human interaction. You have to make all your own decisions, and you may have done all your research and know exactly what you want, which is great. That's a good thing to do. But again, you haven't been in the mortgage business for 10, 20, 30 years.
Yeah.
And you could be missing something.
Okay.
I'm not saying they'll rip you off. I'm just saying you're not going to get the
human interaction
and the guidance that could help you, that much more.
Okay.
And Bruce,
are Purple real quick? Are Purple and Rocket Mortgage, those are online lenders?
Rocket Mortgage online. Purple, actually, I'm not even that familiar with. I'm assuming that's another online lender.
Okay. So those would be like places that you can go and just do everything online, do everything yourself, not have to deal with anybody. And okay, all right. And then my pop's dad up in Utah, do they have to be registered in the state where the property is?
I assume you're meaning Bruce, the loan officer, and the answer is yes. Because licenses are by state, but the company I work for, New American Funding, we lend in almost all the 50 states. We're just not in New York and Hawaii. So I can help you with a home loan in any of the rest of those states because my company is licensed in those states.
Okay. So you don't personally have to be licensed, but as long as you're working for the company and the company is licensed.
Exactly. Well, what happens is we do get a person involved that is licensed in that state. We reach out to that an office in that state, and we say, hey, we got a loan in that state. Let's work it together, and that's how we do that.
Okay, perfect. And then Neff, love you, Neff. She has a question here. Are there any programs for single moms working to qualify for a home?
There aren't any programs specifically for single parents raising children. Unfortunately, that's a good idea. But there are programs that help first-time home buyers. Of course, we're talking about that, and people in specific professions like teachers or police. Those professions, but not technically not single moms. People. Single parents raising kids. There's no program for that, but I think there should be.
Yeah, absolutely, there should be.
Sorry. Go ahead.
Yeah. So I love the interaction, everybody. Thank you so much for jumping in with the questions. We have another question here from Michael, and I'm getting a phone call. I am gonna turn that off. As a first-time home buyer or second-time home buyer, would you recommend a hard money loan to fix it up, and then get a conventional loan?
I assume you're talking about a hard money loan. Hard money loan, by the way, is a high-interest temporary loan.
Okay.
It's basically, we don't care. Well, they care a little bit, but they don't. They
care a little bit.
They don't dive into, do you really qualify, because it's really based on the equity of the house. But it's high interest and it's meant to be temporary. And I assume you're talking about buying the house, fixing it up, and then replacing that hard money loan with a conventional loan. You can do that, but there are options to get a conventional loan to fix a house, and it's your permanent financing already. So you don't have to go through the step of the hard money loan, paying those fees, paying that interest for all that amount of time. You get a regular conventional loan at a good interest rate at decent amount of cost, and that's your permanent loan. But it has enough money in there to fix the house, whatever it needs.
So there is so what he's talking about is going through getting a bigger loan to fix everything up, and then so those are like extra steps.
Yeah, and again, it depends. It depends on the person and their situation. That's something I would look at and say, okay, yeah. And in your situation, that maybe your only option is get a hard money loan right now. Yeah, buy the house, fix it up, and then replace
and then go to conventional
with a conventional loan, refinance that hard money loan. Okay. But again, I could offer an option where, well, here's this one loan that you're buying the house for $200,000. But it needs $50,000 worth of work, so we lend you $250,000 to buy the house and do the work, and it's your permanent loan. You don't have to change it.
Okay. Well, that's interesting.
Yeah.
Awesome. Okay. All right. Let's. That's. Did we just get another one? No, we didn't.
No, I think that was it. We're back to credit scores, I think.
Yeah. Let's go back to credit scores. So, what credit score do I need to come in with? And this is, like I was saying earlier, I think that this is something that deters a lot of people, because we've had good credit scores, we've had bad. And I think a lot of people, myself included, have been at times where I'm like, I don't even want to go down that road because I can't even afford it. So what kind of credit score do people need to come in with?
Conventional will go down to 620, and that's
620.
620, and that's not really that good of credit score.
No, I love it. That's really good news for me.
And FHA will actually go down to 580, and that's a damn.
Wait a minute. You're saying that I can hold on. You're saying that I can have a 580 score and I can still approve for a home loan?
Yes.
Now, obviously, it's going to be like a credit card interest rate, right? It's going to be like 23.999%.
No, it'll be higher. I mean, everyone's seeing 2.75, 3% right now.
Yeah.
But you might end up like at 4.5%.
Okay.
Which is still a good interest rate if you look at rates if you look at historically, 5 years ago. Is that
something that you can? Is that something that you can refinance as well? When you let's say your credit score gets better.
Absolutely, you can always hardly any of the loans. Actually, I haven't done a loan with a prepayment penalty has to be at least before the crash. Since before the crash, so 15 years at least. They just don't exist anymore because the Feds pretty much got rid of the prepayment penalty because they didn't want people paying those anymore. That's that's part of that was one part of the problem that led to the crash back in 2008. So there's no restrictions on refinancing any loan that you're going to get from me.
Okay. And then, so with, oh my gosh, hold on. My dad's got to jump in on this. My dad, Bruce Petrell, says, wow, my first house, the loan was at 15.8%.
That's what I'm talking about. People, 5 years ago, I was telling people, oh, your rate's going to be 5%. And they're like, that's way too high. You're crazy. But I'm like, we were doing loans in the early 90s at 11 or 12%, and people were happy. So you got to think of it as historically. But, still, if you can get a really good rate, great, get it.
Well, since we're talking about rates real quick, let me jump into this one. Justin has a question. He says, as a first-time home buyer with interest rates so low and housing prices so high, is it worth buying a home now if the value of the home is inflated? That's a good question.
Well, the question really is, are home values, are they actually inflated? I think people are sitting around waiting for another crash like 2008. But from what I'm seeing, that's not going to happen because the loan programs that led to that aren't around anymore, or some of them are, but the qualifications are so hard that you have to qualify for a regular 30-year fixed rate loan, which has a higher payment than one of these pick-a-pay loans where you are paying a small minimum payment. You have to qualify for the big payment to get the little payment. So, so even if just to be sure that they'll never default on it. So those programs aren't around anymore, and no one's doing them. And so our home value is inflated right now. It sure feels like it.
Yeah, it does.
But if we have a dip in pricing, home pricing, I think it's not going to be $100,000 like people are wanting, or maybe some people are expecting. I think these prices are here to stay. Yeah, and we might get a little dip, 10% maybe, and that's
so even if we yes, the prices do feel inflated, but you're saying that, I mean, the interest rates are so good right now. I guess, would it be better to wait for it to dip? Maybe not. Maybe just get in at a good price, at a good interest rate.
The mantra in real estate is it's always a good time to buy a house.
Yeah.
When is a good time to buy a house? Right now.
Yesterday.
because it's the only investment that's going to pay you back the amount that it does pay you back between paying down of the principal and appreciation of the house. Even if the value dips over time, It's like the stock market does that. If you're in stocks and you're making a lot of money, you're gonna see dips in the stock market, and you're gonna lose part of your portfolio. But it's gonna come back, and you're gonna make it back somewhere else.
Here's
house is always a good investment. Is the point.
And then here's another one from Michael. Can you use a 401k or IRA as a down payment to get into a loan?
Yes, you can. You just have to talk to whoever administers that retirement account for you. So you can ask them what are the terms of how can you withdraw and how much can you get? Because usually you can't get the whole thing. And usually you can borrow against it. And if you just make a payment to yourself, you're loaning yourself your own money. And you make payments until it's all paid back. Or you can do a hardship withdrawal.
Is that something that you can take care of? Like if I come to, no, it's not something you can do.
No, it's not. That's something because you have to deal with that again, like that 401k administrator, whoever it is. What's one of them? Franklin Funds or I'm forgetting the names, but you have to contact them and say, okay, I need some of my 401k money.
I'm a musician, bro. I don't have a 401k. My 401k is cash.
I got $401.
I got not even that after 2020.
You have to talk to them, and they'll tell you what your options are to get money out of there to use as a down payment for your house. And that can be used. We do allow that. I do that all the time.
Okay. So back to credit scores real quick. So you said 580 is like the minimum to jump into. Now, if I jump in with a 580, what am I looking at as far as my interest rate? Am I looking at like 15%?
No. Like I said, you're gonna change buds here. You're gonna, where people, like I said, are hearing, 2 3/4, 3%. If you have a good credit score, you might end up at 4%, which is still a good rate. But what that means is you're going to qualify for less house because the payment's going to be higher. So it's going to be harder to qualify for that payment because the rate's higher.
And in order to get the best rate possible, what credit score do I need to come in with?
By the time you hit 740, after 740, it's all the same number. Okay. So
anything after 740, you're topped out.
Yeah, there's no more discounts at 800.
Okay.
People want that 800 score, but
that's crazy. People come in with 800. What's the highest credit score you've ever seen?
It was 8 something. I think it was 830 something. Yeah.
What?
Yeah.
How does that even happen?
Well, I can. Part of the services I offer is helping you with your credit if you need it. I'm not a credit repair guy, and I don't recommend any of those credit repair agencies out there. I like
how you said that with conviction. I'm not a credit repair guy.
But no, because there are probably people out there that use those companies, and they're just, a lot of them just take money and don't do anything.
Yeah.
I can give you real world advice on how to get your credit better, and that I've seen work. And people come back to me and says that totally worked. My credit score was 620. Now it's over 700.
Wow. Wow. Okay.
And I don't have any secrets. I just know how how credit scores look at your credit and what
how to contact who and say what. Right.
Exactly. And
so I'm glad that my sister jumped on right now. Shivani, she's a loan officer up in Utah. She's been doing loans, I think now for 10 years. Am I wrong, Shivani? She saw someone up there, 837. It was an old dude who wore New Balance shoes. I love it. And here we have Francis.
Hi, Francis.
How are you?
That's
hello. Steve B would like to know if you refinanced 1 year ago and have strong credit score with 40% equity, can you get a second this soon after the refinance?
Absolutely. Yes.
Really?
Yeah, there is no what's called seasoning requirement to get a second. It's all about the equity that you have. So if you have enough equity, any bank will give you and get a strong credit score, and you'll need to prove income as well. But just about any bank will give you
this is like a perfect puzzle. Like there's so many things that all kind of have to happen all at the same time, you know?
Yeah, pretty much. Yeah, but that's the importance of, keep getting your finances in line, getting your credit score in line, making sure your all your payments are made on time. I know people get into trouble, that happens, but
Berto, where have you been all my life?
Right here.
Oh, that's beautiful. All right. So pretty much we established that 580 you can jump in. And is that only with one loan or with all loans?
That's FHA 580.
FHA. And then at 740 you pretty much topped out. So ladies and gentlemen at home, if you can get to 740, you have made it to the promised land. And let's jump into the next one, which is, how much debt can I have? Because I think I know a lot of people that carry around a lot of debt, but still have a great credit score because they make their payments on time and they do their stuff. So how much debt can I have in order to get into loan? I know it probably has a massive effect on how much loan I can approve for, right?
It does. Of course, the more money you make, the more houses you qualify for, and the more debt you can handle. But the thing to remember is that for every dollar of debt that you have, it'd be credit cards, car loans, for every dollar, you have to make like $3 in income to cover that debt before you qualify for a payment. So if you have $1 a month in debt, you have to be making $3 a month, earning $3 a month, and then after that you need to make another $1 or $2 a month to help you qualify for the home loan, because the $3 just goes to pay the $1 debt. So that's kind of rough. But so how much the comes down to how much debt can you have? It depends how much money you make. But it's always best to have the least debt as possible when you want to buy a house.
Okay. I have to throw this up because my good friend, Mr. Jim Wooten from the podcast World According to Woot, and he's a fantastic musician and bass player. He poses a very good question. Hey, Berto, can a bass player buy a home even if he can only play one note at a time?
No.
It would be even better if he said pay one note, because I got my car note or my house note. Either one, I can only do one. So, Jim, love you. Thank you for tuning in. Appreciate you being here. So
how much debt? As little as possible. I mean, some debt helps you with your credit score. You have to have debt to have a good credit score. That's something a lot of people don't understand. Actually, you actually have to have debt to have a good credit score, because if you're paying on a debt, your score is seeing that. If you pay off all your debt, feels good, but it's not that great for your credit score.
Oh, here's a quick question. And this is just off the top of my head. I've heard a few people say that it's good to carry around a balance, but a balance of 30% or less. Does that ring any bells? Like with
the best balance on any credit card is 30% of the limit of that card. So if you have a card with a $300 limit, you want to have a $100 balance. Your credit score loves that. And don't pay it off. Pay the minimum payment. If you need to raise your score, that I'm really generalizing here. So don't go out and try this and say it didn't work.
I'm just going to pay the minimum for.
You want to, if you want real world advice on your credit that applies to you personally, you want to call me or contact me. Okay. And I can tell you, and I'd have to run your credit just so I can see, okay, this is what you want to do, your personal situation. to get your credit score higher. But that said, your credit score loves your credit card at 30% of its limit. Make the minimum payment, and over 6 to 10 to 12 months, you're going to see your credit score go up because it sees you're making a payment on time over time.
Just don't miss one payment, because if you miss one payment,
and of course,
isn't it like one of those like 1 30-day late is like, well, just like fuck you?
Not necessarily. I mean, it's not a good thing, but you know, I've done home loans for people with multiple 30-day lates on the credit report.
Excellent. Then we need to talk.
On your mortgage. If you have a mortgage, never miss a mortgage payment.
That'll okay.
You up. Yeah.
Okay. Here's an interesting question, which I'm not familiar with this whatsoever, but I'm sure you are. Do I need to find a title company, or does the mortgage company provide that one?
If you're refinancing, the mortgage company will provide a title company. If you are purchasing, the seller picks the title company. So either way, it's provided for you.
Wow. Wait, say that one more time. If you're refinancing,
your home, me as a lender, the lender will provide the title company for you on a refinance. If you are buying a home, the seller of the house will provide the title company.
Can you request your own if you want?
If you're buying a house, you can try that.
Best of luck.
Yeah, the seller may look at it and go, well, why do they want that? I'll take this other offer. On a refinance, yes, you can. If you could say, I like such and such title company, can you use them? And I'll say, yeah, I can use them, but I have a relationship with this title company, so it's going to be easier for me to close your deal if you let me use mine.
Okay.
But I will use yours if you want.
Okay. Awesome. All right. Let's jump into the next one, which is, how much income do I need to show? This has always been a difficult one, especially for entrepreneurs, musicians.
Yeah.
It's been rough because I remember years ago, I wanted to buy a house and they said, well, you have to show that you make income, but as a 1099 employee, as a contractor, self-employed, we make our money and then we have our write-offs. So, and that's what we do our taxes off of. So the hardest part is that we write off all this stuff. And, so what we pay taxes on is not a whole lot, but when we go to do when we go to get a loan, they say, well, you have to prove that you make this money. I'm like, well, look, I make it. And they're like, no, you don't, because you wrote everything off. So it's like a catch-22 where, you have to bite the bullet and pay the taxes. So, how much money do you actually how much income do you need to show in order to approve for?
Well, again, it depends on how much house you want to buy. The price of the house and the amount of the loan you're going to get. How much money you're going to put down. So that determines the loan amount, because if you're buying a house for $300,000.
What's the average? Because you've been doing loans forever and you do loans every single day. So, I mean, the average home that comes in here in LA area, Southern California. I mean, are we looking at 200,000? Are we looking at 400,000? Are we looking at 5% down? Are we looking at 20% down? What would be a decent average that you have noticed?
As far as down payment amount?
Oh, maybe like a correlation between both?
Well, most people are putting down anywhere from 3 to 5%.
And for first-time home buyers?
Yeah, well, actually, even second time.
Okay.
There's a little bit less of a percentage of people putting 10% down, and then you have the people that have a lot of cash and they're putting down 100 or 200,000, or they're selling their house and they're netting $400,000 from the sale of their house, and they're putting all that, or they're putting 300 down, saving 100. They're putting $300,000 down. So from the sale of their house into the new house.
Wow. Okay.
So there are some people doing that, but that's not the typical home buyer. That's it's typically it's anywhere from 3 to 5%, and then some people putting down 10%.
And then with the how much income do I need to show? Let's just pick a number. Let's look at a $300,000 home. If we're looking at a $300,000 home, how much income do I need to show? And I know that it also has to do with how much debt you're carrying as well, because
you have to be able to afford the house, the new house payment, including
and
the
debt
plus your debt.
Let's pretend that I have no debt.
Okay.
This is a good exercise. I like this.
So if you, I'll just cut to the chase here. If you buy a house for $300,000 and put down 5%,
okay,
that's zero. And you don't have any debt.
Okay.
So actually, we'll see the difference here. If you don't have any debt,
mm-hmm.
That's not that much. You want to be making about $4,500 a month.
And the way that you can, so you have to be making at least prove that you're making $4,500 a month.
Yes.
In order to prove for a $300,000 home with no debt.
If you have no debt, yeah.
Now, imagine that I'm carrying $15,000 in credit card debt.
We got to translate that to payments.
Okay, let's say a monthly payment, a minimum monthly payment of $100 a month for the credit card.
For $15,000 worth of credredit cards?
I don't know.
It'll be more.
I'm just coming up with. I just throwing numbers at you. I don't know. How about 660? I don't know.
No. $15,000 worth of credit cards, you're going to have minimum payments of about $500 at least.
Really? Okay. What if it's like 3 credit cards that are $5,000 each?
How much credit card debt do you have, Whit?
Oh gosh! Now we're getting real. Are we getting real? Let's talk. Let's get real, mother.
Let's do a typical scenario. Let's say someone's got a $500 a month car loan.
Okay.
And they owe $6,000 on credit cards, and that payment's like $100. So now you have $600 worth of debts. Okay. So to buy that, where you needed to make $4,500 a month, now you need to make $5,500 a month to buy that same $300,000 house, because you have $600 worth of debt.
Oh, and that's you're not talking about the whole amount of debt. You're talking about the monthly amount of debt.
Exactly. And there was a question, Siobhan asked that question. So it's not about how much you owe. It's about the minimum payment on those credit cards, what the monthly payments. That's what we use to qualify. What are the monthly payments? Okay. Yeah. And we don't.
That's why backing up. That's why it's so important to pay off as much debt as possible.
Exactly. Because then it's easier to qualify. You don't have to make as much money. So, and if you boil it down to a self-employed person like us, when you file your Schedule C, which is your business, if you're not incorporated, let's just say, that's a whole other thing. You said you have your gross income and you write off all your expenses, and you have a net amount, and that's what you get taxed on. So of course you want to write off as much as you can, so you pay at least the least amount of taxes. But that doesn't help you when you're going to qualify for a house, as a lot of people have found out. What do you mean? I made $100,000 last year. Yeah, but you wrote off 75. Yeah, and your net income was only 25,000. That's what we look at.
Okay. So actually, this brings me into the next segment, which is how can I show my income? So we're talking about taxes. We're talking about, especially for someone who is an entrepreneur, someone who is a Schedule C person, 1099 subcontractor, but you also have W-2 income. So real quick, what are the best ways, or not the best ways, but what are the ways that we can prove our income besides tax returns? Are there bank statements? Are there, pay stubs? What's going on?
If you're again, we'll keep it in the self-employed realm. I mean, when you have a regular job and you get a paycheck and a W-2, your income's usually pretty cut and dry. You get a base pay, and that's how much you make. Yeah. So, but for self-employed people, I just got lost. What was the question again?
Right? We can go down some rabbit holes on this one. So
Yeah.
I'm thinking that you know, showing my income, proving my income. There's two different routes. Actually I want to say there's three different routes.
I remember. I remember now. So for a self-employed person, there are programs where you can say, well, you know what, my taxes really don't paint the picture of my real income. So we'll use 12-month bank statements. So we can see how much money you're depositing every month. But when you do that, you're not talking about 3 or 5 or 10% down. You need to put 20% down.
Oh, geez.
And your interest rate's going to be 5 or 6%.
So you can go off of bank statements, but you're going to have a higher interest rate, and you got to put a lot of money down.
Exactly. And I do those loans all the time too.
Really?
Yeah, because especially for corporate borrowers, they hide as much money as they can.
Right?
They just,
the damn
legally,
snakes.
of course. So.
Well, here's a question.
Most people use the bank statements loan, so and they get it, and they have money, so they have the cash to put down.
Okay, all right. So if we don't, someone like me, someone who doesn't have the cash to put down, bank statements is probably not the best way to go.
No, because you would need to somehow put together a larger down payment.
All right. Well,
like
how many more gigs are you ready to offer me with TLR? Okay, so we've got bank statements. We also have, W-2 income. What about someone who is a married couple, and one of the wife is W-2 and the husband is 1099? How does that combine? Can you combine that stuff?
Absolutely. The W-2 person, we look at their income's what it is. There's base income. Maybe there's some overtime and some bonuses. We'll use that too. So we'll calculate whatever that is, and then we'll go look at the Schedule C for whoever's self-employed, and do that same calculation. Look at the net income, and there's some stuff we can add back. Like a lot of times there's what's called a depreciation deduction on your Schedule C on your self-employed schedule when you're self-employed. And we can add that back, and sometimes it's a lot of money. Sometimes people do a $25,000 depreciation deduction. But
really?
Yeah. So if your net income is $25,000, but you had a $25,000 depreciation deduction, now all of a sudden your income is $50,000. Exactly.
That's awesome. Okay.
So there are some stuff we can add back. So again,
but that's also why it's so good to talk to a human.
Exactly. So, if you hear, oh, you use the net income, someone looks at their Schedule C, like, oh man, I don't qualify, forget it. But when you're talking to me, I'm looking at it, goes, well, no, you look at, we can add all this stuff back. And now you qualify.
Okay. Okay. So
there you go.
Let's move into, because we talked a little bit about it, let's talk into how much is a down payment. And I know we talked, you mentioned 3, 5, 10, 20. I know you can put whatever you want, but are there requirements for certain loans?
Yeah, for conventional, you could put as little as 3%. That's 3% of the purchase price. FHA is 3.5%. You're going to get a little bit better interest rate on the FHA, and possibly better mortgage insurance, which is different from homeowners insurance. I think we're going to get into that.
Yeah.
So 3.5% for FHA. Those are the minimum requirements, and VA 0.
Yeah, VA 0 down payment?
0%. The VA awesome. Will, if you're a veteran, they will finance 100% of the price of the house for you.
Wow, that's beautiful.
That's for our vets out there.
So for someone that's jumping into a regular FHA loan, they're looking at a minimum of a minimum required of 3%.
3.5% for FHA.
3.5%
for conventional.
Okay.
And the less down payment usually isn't usually better. Typically better, or better just because it's less. Again, it depends on your situation. That's where I come in and say, well, you're going to get a lower down payment on the conventional side, but your payment's going to be higher because the mortgage insurance is more expensive on the conventional than it is on the FHA.
Well,
and mortgage insurance for everyone out there is you have to pay mortgage insurance if you're putting less than 20% down.
So if you put less than 20% down, you have to pay the mortgage insurance until when? Like for the whole?
Insurance. For FHA, it's for the life of the loan. For conventional, after 2 years, you can ask for it to be removed. Or you could always refinance. If you get enough equity, you could always refinance. If all FHA loans have, even if you buy a house with, and we're getting a little bit in the rabbit hole, but even if you buy a house with an FHA loan and put 20% down, you're still going to pay mortgage insurance because that's part of an FHA loan. So if you buy a house with less than 20% down and you're paying mortgage insurance, you can always refinance that loan down the road when you have more equity, a 20% equity, refinance it into a conventional loan with no mortgage insurance. Or again, after 2 years, you can ask for the mortgage insurance to be removed. That's conventional only. FHA is for life of the loan. Unless you go FHA and then refinance. Oh yeah, but you can the only way to refinance is if you have equity in the exactly home. And 20% equity and a life of loan for FHA is life of any loan is 30 years or when you pay it off. Yeah. So I mean, here's a hypothetical. If I buy a house with 3% down, I have to pay the insurance. And then 3 years down the road, the market goes incredible. And all of a sudden I have 20% equity. And then I can refinance at that moment and take the insurance off. Exactly. That's really interesting. Okay. I like it. Here's a question from Richard. Can you get an FHA on just land, but intend to use as a business? No, FHA only lands on real estate with a plot of land with a house on it, or units, up to 4 units. But so you can't the land loan, and those are out there, but those are you're going to pay a premium for that because a land loan is riskier than buying a house. So FHA won't lend you the loan won't give you a loan to buy land, whether you're going to use it as a home or as a business. It doesn't matter. They just won't lend to you for land. Okay. Excellent. All right. Let's keep moving along because we got a lot of stuff that we're still trying to cover. Like I said, ladies and gentlemen, we got a lot of different topics that we're trying to touch base on everything that we can right now. And I really, everybody at home, I hope you guys are enjoying this. I really am. I feel like I'm drinking a beer and learning something. So this is speaking of drinking beer. Here we go. Yeah, let's go. All right. Next one. What the fuck are closing costs, bro? All right, closing costs. When you buy or refinance a home, there are at least 4 entities, and I'm probably going to think of a fifth involved. There's, of course, the lender. Okay. There is the escrow company. We're going to get into that. There's the title company. And some people that may not be in California, some other states don't have escrows. They're not escrow states, but still the title company is going to charge fees for those services. There's the appraiser who's going to go out and appraise a house. So every one of those entities that's involved charges money to give you their services. So those are the closing costs. An appraiser is going to charge about $500 to go and appraise the house, whether you're buying or refinancing. Escrow is going to charge you an escrow fee, about $500 or $600, depending on the loan amount. They're going to charge a notary fee because that's where you go sign the loan docs, and they're going to notarize them for you. They're going to charge you. They're going to charge a archive fee. they're just fees that they have. It's just to cover overhead, because whenever they perform their service, there's a cost involved to them. So of course that gets passed on to you, and then you on top of that you pay for it. If somebody makes money, you got to pay for that service too. So so that's what closing costs are. It's the cost for each company that's involved in giving you the loan and closing the loan. It's the cost for each of those companies that they're going to charge you.
Do we have to pay for the valet and for the I don't know. I'm trying to come up with all kinds of, like, I want to be a part of the closing costs. Like, I think that while you're signing your docs, I could come in and play a song and I can be part of the closing costs.
I'll add a bass player fee.
Yeah, I'll add bass player fee. And is it possible to have closing costs tacked onto the loan, or
when you're refinancing? Yes, you finance the cost, so you don't have to pay them out of your pocket. And it's people are like, well, I don't want to raise my loan amount. I want to borrow more than what I owe on the house right now, because they just won't feel good about it. But if you really look at it, on a refinance, your closing costs are going to run about $3,000, maybe $3,500, and you're talking about $20 a month in your payment, maybe, to finance those.
Wow.
So
might as well just come up with it.
I'd rather keep $3,000 in my pocket and pay $20 more a month. That's me. If you feel differently, pay the closing costs out of your pocket.
But you said that's only with refinancing. Yeah,
on a purchase you do have to pay the cost out of your pocket.
Okay.
So when you're buying, it's always your down payment plus your closing costs.
Okay. So when you're looking at a $300,000 home and you're looking at 3% down, 3.3% down plus closing costs, you're looking at what, like around $15K for
well, let's see, my handy dandy calculator.
$9,000 to put down.
Yeah, exactly. So but then on top of the closing costs, you also have what are called prepaids, your taxes and your insurance that are due at closing.
What are you, the sheriff of Nottingham? Like, what else do you want to tax me for, bro?
Look at my bag, and you can just put the money in it. Well, it's taxes. Taxes, you got to pay taxes, right? So when you buy a house or refinance a house, tax man is right there saying, I need my taxes. Your insurance premium, your homeowner's insurance might be due. If you're refinancing, it might be due like the month for closing, so you got to pay that. If you're buying a house, you got to pay the first year up front. Oh
gosh, okay.
Yeah. So
there's a lot of factors that go into this.
Exactly. So typically, I mean, you're typically like a $300,000 house, you're going to end up at about $7,000 or $8,000 total with closing costs, and then all the insurance and taxes that are due at the closing. Okay.
My dad says that Berto needs a new DW kit.
Right. There is a DW fee on there. You will see that.
There's a DW fee along with the valet fee and the bass player fee. And we're also going to, because we're talking about it, there's a 5-foot Viking fee.
I know that people tend to think, wow, everyone's just got their hand out to get money from me when I'm doing this. But believe me, those fees are there. They're all there for a reason. Yeah. Because it's either a hard cost that we're paying, so we have to. We're not going to pay a cost because we're doing this to make money. This is what we do. Yeah. So we have to, any hard costs, we got to pass it on, and then obviously make money on top of that. Yeah. So but it can feel a little like a lot, but hey, you're buying a home, you're buying we're lending you hundreds of thousands of dollars. It's not going to be cheap.
So my sister, she says, what's a rough estimate of closing costs? Now, I think that's very general, but if we're taking into the account of like coming in with 3% down on a $300,000 home with good credit, I mean, what's a guesstimation?
Well, like we said, of just closing costs, like I said, it's going to be like $3,000, $3,500. But then you got your taxes and insurance on top of that, which is going to be another $2,000 or $3,000.
Okay, so you're looking about like $5,000-$6,000.
Yeah, okay. On a $300,000 home, it'll be more as you go up on the price.
Here's a question right here from Neff. I heard that it is a possibility that the seller could pay the closing costs. Is that true?
Yeah, that is true. Sellers are getting so much for their homes now when they're selling them that there's a lot of cash that they're getting at the closing. But still, no matter what, they have to agree. You can ask for it. But I just did a deal where the seller said, we'll give you closing costs up to $10,000. And the closing costs were only like $7,000. So it covered all the costs. And they didn't have to, they just had to come in with their down payment. You always do have to come in with your down payment.
Yeah. Okay.
No one can give that. Well, you can get a gift from a family member for it, but you can't get that from the seller or the lender. The down payment has to be covered.
Oh, here's a good friend of ours. Steve Elo. What's up, buddy? Good to see you, man. Thanks for hanging out. Incredible musician, very good friend. And he writes, when I was able to buy a house, it was the largest stack of papers to sign that I had ever seen. Wish I could do it again. I can't imagine. What is the contract now? Like 9 pages, 12 pages?
More than
in quadruplet?
No, there's about, I want to say 40 separate documents you're going to sign. Yeah.
I'm thinking about the purchase agreement.
The purchase agreement is it's 10 pages.
Yeah.
But no, the closing documents there's 40 separate documents, and you gotta thank lawyers for that, because every time someone gets sued, a new disclosure comes out.
Yeah.
And the truth is, your hand will cramp when you're signing your closing documents.
All right. Well, let's jump into this is something that I am very curious about. What is escrow?
What is escrow?
Yes. What is it, bro? I can't. When I first read it, I couldn't pronounce it. I was like, is it escrow? Is it escrow? Is it? And what does it do? And why do we need it? It's like escrow, a 30-day, everybody chill the fuck out period. Like, what happens?
Well, escrow, the term escrow can be used for the how do I say this? For when you're buying a house and you sign a contract with the seller, and you are what's called in escrow, meaning meaning you're in contract, everyone's doing their job and getting all the paperwork ready, and then so you can close escrow. And we use the term escrow because there's an escrow company involved, and what the escrow company is but they act as a neutral third party. So when you go to if you have the cash to buy the house and the seller has the deed to give you the house, no one wants to act first. The seller doesn't want to give the deed first because they want the money first, but the buyer doesn't want to give the money until they have the deed. So what happens is they take the deed and the money and they put it in escrow, and escrow does this. So the escrow
Why does it take so long? Shouldn't it be like one of those things like, listen, you got the deed, I got the money, and like me and you at the same time, like same time, motherfucker, same time.
Yeah, but that's the thing. No one trusts anybody. So and actually, it's California law. You have to have an escrow company. Because
so are there? So you're saying that there are states that don't have escrow,
right? But those are called attorney states, and an actual attorney handles the closing. But they do the same thing. It's the money and the deed goes to the attorney, and the attorney does that.
Okay.
And of course they're insured and all that stuff, and we use the term escrow because there's an escrow company involved. But buying a house, the process of from contract to closing is called the escrow period. Mm-hmm. And you're in escrow, and we have closed escrow when everything's done.
I like this. Always request that the seller pay the closing costs on your initial offer. Worst that can happen is they counter and say no.
This is true, but always check with your real estate professional because the real estate market is so hot right now here in California that an offer that you're going to be up against other offers always, and an offer that comes in asking for closing costs to be paid could be rejected in favor of an offer that
somebody who just does their shit. Yeah,
exactly.
Okay. Well,
but your real estate professional can tell you what's, oh, I know this house. I know they're willing to pay costs. Yes, let's ask for it. Or
this is a comment from my wife. She says, if we have any rich relatives that want to do a good deed, holler, the 5 Foot Viking, and I need a home. Dang, so many costs.
Right? I'll put that shout out to myself out there.
Yeah, we'll throw it. Yeah, we're gonna buy a house together. It's going down. And my good friend Kevin Hamill, guitar player extraordinaire, literally from it. If I'm not mistaken, Maine, like the furthest away from California where we can get. He's tuning in. It's got to be like 4:00 in the morning over there, buddy. What's up, Whit? Love the show. I want to fondle your escrow. Thank you, bro. I appreciate your input into the 5 Foot Viking podcast. You are a gentleman and a scholar occasionally. So I think we touched base on escrow. We touched base on why escrow is necessary. Let's jump into the last one that I had a question about. And this is, what is homeowners insurance and HOA fees? And the reason why I'm curious about this is because I'm one of those dudes that like I jump on like Zillow and Truly, like I have these apps and I just kind of look around the areas and see. I'm curious what houses are going for. And then I'm that idiot that has the mortgage calculator right next to the regular calculator on my phone, and I plug it in and I'm like, oh, hey, this is only, $1,200 a month payments. I don't take into account all the factors that we just talked about. So
right.
But what are HOA fees? Why are some of them ridiculously high? And homeowners insurance, if you can expound on that.
Yeah. Well, an HOA fees you're only going to have if you buy a condo, a townhome, or something in a project that has common areas. The HOA fees are actually go to pay for that stuff. Go to pay for the common areas. Like if you buy a condo and the complex has a pool, those dues go to pay to maintain the pool, and whatever other common areas you have. You might have tennis courts, you might have or you might just have green belts, but you still need somebody to maintain those. Also, the project's going to have insurance to insure the buildings. In case of fire, to ensure liability insurance, a bunch of other coverages, and so that has to be paid for. So that's your HOA fee. Monthly HOA fee goes to pay for that.
So the more amenities you have in your complex or in your place, the higher it's going to be.
Exactly. So that's an indication. If you have a $400, $450 HOA fee as opposed to a $200, you're going to have bigger and nicer amenities.
You got a golf course versus
exactly.
I have a walkway.
If you're buying a regular home, there's no HOA.
Okay. So HOAs are if you're getting a condo or a townhome and you have common areas where it be, swimming pool, tennis courts, golf course, things like that. So out in like Palm Springs or something like that, where you might get a condo on a golf course, your HOA fees are going to be much higher than if you get a condo or a townhome in Rancho Cucamonga and you have just a pool.
Exactly.
Okay.
Now, homeowners insurance, that's if you're buying a regular home, you have to get homeowners insurance. That covers damage to the home by fire, and also covers liability if someone gets hurt on your property. There's a couple other things it covers as well. Those are the big two. It does not cover damage to your home in case of flood or earthquake. They're separate coverages you will need to buy.
We have to get a separate insurance for earthquake.
Yes, and it's really expensive. Most people don't have it.
Wow.
Yeah.
Okay, so
Even though,
so if I buy a house, I own my house, I have homeowners insurance. There's an earthquake and it messes up the foundation. I'm fucked, right?
you have to pay for it yourself. Yep.
Ouch. Okay.
Yeah. But it's so expensive. Most people don't have it. And,
Mm-hmm.
but I haven't heard of anybody, that, you know, got, that had that damage and kind of, I'm sure it's happened, but I haven't heard of it in my career.
Mm-hmm.
So, but like either way, most people don't have the earthquake insurance.
So
I count
homeowners
on one
insurance.
hand in the last 10 years how many people bought home earthquake insurance.
Okay. And but you did say that homeowners insurance covers fire and
liability.
liability. Okay.
Yeah, those are the
So
big things that it covers. There's some other stuff too in there, and consult your homeowners insurance professional for that.
yeah. Okay. Okay. Awesome. Now check us out. We're moving. This is good. I like it. We've been on today for an hour and 20 minutes, which is, I like to keep my podcast around an hour, but there was definitely a lot to talk about. And thank everybody for all your inputs and your questions. I thought it was very thought provoking. I asked Berto earlier, I asked him if he, for someone who is looking, the first time home buyer that's getting out there, the person who wants to jump in and get something, what are 3 tips? What are 3 tips to prepare yourself to jump into this? And so I'm going to talk about the 3 tips and then I'll let Berto expand on them. So the first one, Berto says, tip number 1, save as much money as you can before buying a home. Even though down payment assistance is an option, it's always better to have your own money if you can. So if you can expand on that just a little bit.
Yeah. You want to really have the 3 or 3.5% down payment yourself. You can get assistance for that, but that's going to be, the terms aren't going to be as good as if you have your own cash for your down payment. And the loans with down payment assistance are hard. They're harder to qualify for also. Those are first time home buyer programs. And a lot of people think, oh, first time home buyer, they're going to be very lenient with me, but that's actually not the case. They're harder to qualify for, and you get not as good terms on them, but they do help. The way they help you is they do help you with the down payment if you don't have it. So you're still able to buy a house. But either way, it's best to have your own cash after the down payment if you can make that happen.
Okay, all right. And tip number 2 would be pay off as much debt as you can. The less you have, the more house you can afford.
Right, and we just went over that. For every dollar debt you have, it's $3. You have to make $3 a month before you even qualify for the house payment. So the least amount of debt you have, the more house you're going to qualify for.
So if you want to buy a house, don't go out and buy a car.
Yeah, that's cars are home loan qualification killers.
Really? Okay.
They are, especially the home with 2 car loans. Oh, yeah. And by the way, never co-sign for a car loan for anybody.
Really?
Because I've seen people come apply for a loan and they have 4 or 5 car loans on their credit report. Oh, that's my
but that's not my car.
Yeah, it's not mine. It's my cousin's. Well, you borrowed the money you bought it in your name, so it's your debt, and now you can't buy a house.
Oh, well, with this tip, paying off your debt, and I know we were talking a little bit about car loans and credit cards and stuff. Is it better to have a 0 credit card debt and a car payment, or no car payment and a credit card debt?
No car payment and credit card debt is definitely
definitely better.
Yeah.
Okay.
But I know, but you need people need cars. So,
yeah,
what are you going to do? But
you don't need a Tesla, bitch.
Best case is, get a cheaper car or don't finance a car. Especially if you think you're getting ready to buy, maybe you're about to pay your car off, or you're in the mood to buy a new car. Just wait, because it's going to hurt you on the qualifying for the home loan. So if you buy your car after you buy the house.
Okay.
Again, but this is for typical working people,
Yeah.
But I got clients that make $20,000-$30,000 per month. They can go buy $1,000 a month car payment, and they don't.
It doesn't matter. Yeah.
Yeah, but for typical working people, you don't want to have a car loan if possible.
Mm-hmm. Michael, just want to say thank you so much for joining us. Appreciate your engagement. Appreciate your questions. I love that you're in Texas and you're hanging out. So I appreciate it. Let's jump back into tip number 3, final tip of the day. Get organized. Home lenders will ask for pay stubs, W-2s, taxes, and bank statements. Have all of that ready to go.
Yeah, and even more than that, those are just really the starting point. We're going to ask you for all this stuff, and we're going to ask you for updates. Then we're going to ask you again for updates, and it's going to feel like we can't get enough paper from you. But that's just the way home loans are. We're lending you hundreds of thousands of dollars, and we're going to get in your business.
Mm-hmm. So
you got to be ready for that.
Okay.
And keep everything. Get organized. Keep everything. All your pay stubs. I know lots of stuff's digital now, but make sure you have all your financial stuff handy at a moment's notice.
Okay. Awesome. Yeah. All right, ladies and gentlemen, the 5 Foot Viking podcast number 13 with Berto. I love you, buddy. Thank you so much for spending your Tuesday with us and giving us a deeper dive into the world of home lending. Right now, wanted to give the stage to you. If you have anything that you want to promote, I know that because we do a lot of shows as well, and let everybody know where they can get a hold of you.
To start, you can see my contact information for home loans there at the bottom. That's my email address. And that's my license number there, so you can have that on file. You can buy that email. I look at that all the time. It's work, so it's on my phone, it's on my computer, and so if you reach out to me, I will get back to you as soon as I can. As far as shows, let's see.
Dude, when are you playing again, man? When is the long run playing?
The next long run show, as far as I know, is the Canyon Club in Montclair on April 23rd.
April 23rd.
Yeah.
So, ladies and gentlemen who are local to Southern California, the Canyon Club in Montclair, it's right off of the 10 freeway, and I can't remember, but it's in Montclair. Yeah. And you guys are playing there on April 23rd with the long run Experience the Eagles. Also, if I'm not mistaken, I think in the description above or below, depending on what you're watching, you can Berto's information is there as well. His cell phone number, his social security number, the 3-digit code on the back of his. I'm just kidding. All that stuff is there. You can reach him out everywhere. And we got a couple people jumping on real quick with some great comments. Berto killed it. Yes, that's coming from a loan officer as well. I told her, I was talking with Shivani earlier today. My sister, she's a loan officer in Utah. And she was like, make sure he says this. Make sure he talks about that. Make sure he talks about that. And I was like, bitch, no, I'm just kidding. I love my sister. And she was, and she even told me, she's like, you're going to have a really good one. So, we got Neff. Love you, Neff. This was awesome. I'm sure that we got a lot of great information to a lot of people. My wife as well. Berto, thank you for sharing.
Welcome, Marlene.
Sharing your knowledge. My sister, thank you so much. You've answered many of my questions. I appreciate it. I love that I've got such a supporting family. That's awesome. My wife, my 2 sisters, my dad. Just really wish my brother CG would tune in every now and then. Dude never supports, man. It's messed up. We got Sarah. Great info, Uncle Berto. I love it. She even put you on blast. You might even be smarter than my dad.
Oh, I know. I'm
That's pretty awesome. Well, Ladies and gentlemen, want to thank you all for hanging out with us. Once again, you guys can go to the 5footviking.com and you can look at all of the past podcasts on there. You can watch them or listen to them on whatever platform you like. Also, want to send a big thank you, big thank you to Berto. Thank you for spending your Tuesday with me. I appreciate you so much.
You're very welcome. I was happy to be here.
I really think that we're going to have to do this again. I already know I'm going to get a lot more comments and a lot more questions. So we'll definitely revisit this podcast in the future. And to be honest, I'm looking forward to applying this knowledge and moving forward. I'm actually going to reach out to you and see if we can work on some credit stuff. I think that's a great tool that you offer.
Looking forward to it.
Awesome.
I was thinking too, me and you about the same height, so since I'm Hispanic, maybe I'll start a 5-foot conquistador.
Yeah, I want to be on your podcast.
We'll go head to head.
Good times, man. All right, ladies and gentlemen, thank you guys for hanging out. I appreciate you, and I think this is how you end it.